Bloomberg Audio Studios. Podcasts, radio, news.
It's hard to believe it's been a little more than a year since a key lender in the world of technology and startups came undone, collapsing and requiring the U.S. federal government to step in. That failure, the second largest in U.S. history and the largest since the financial crisis of 2008. It wasn't alone in terms of troubles in the regional banking sector. Signature Bank, First Republic, and the group continues to be on everyone's radar.
It does indeed. And with one perspective, and why we have heard a lot of senior execs in the banking sector talk about the value of being boring, that is, including our next guest. With us now is none other than the chairman and CEO of PNC Financial Services, home to PNC Bank, Bill Demchak. He's joining us now from Pittsburgh. Bill, great to have you here with us. And I got to ask, is that a Bloomberg behind you?
Of course it's a Bloomberg.
All right.
All right, so nobody send Bill and IB right now. He's on TV.
I am probably one of your earliest Bloomberg clients.
Interesting.
Way back to the early 90s on the trading floor.
All right. There are some stories there, not only about that, but also about what you have seen. Well, let's start there. I mean, I really appreciate someone who has been within the financial industry and then the banking industry for a while. You've seen a fair amount of cycles. You've seen crises. What's the best word to describe today's banking environment and kind of business and economic environment? And they don't have to be the same word.
Yeah. Look, I think banking is a little bit unique at the moment because we're in this uncertain period, as a function of pending regulation, the impact of interest rates and when the Fed's going to ease or not ease. So it's a little bit different. I think the economy is kind of what you read about. It feels pretty healthy. It's slowing at the margin from a rapid pace. Labor's good. And at least inside of PNC, we're largely on the same page with Chair Powell on his recent comments.
What can you tell us about your customers right now? And I ask because we had a really interesting conversation with the president and CEO of Citizens Bank of Edmond. I mean, this is a tiny bank in Oklahoma, one physical branch, and they have an online business with 1,000 customers. So, I mean, we're talking tiny. But Jill Castilla told us yesterday that she's never seen a better environment for her customers. Things are really, really good right now.
It's Jill's actually a good friend. She's not wrong. On the corporate side, there's areas of weakness, but there's a lot of areas of strength, particularly as we kind of lean into manufacturing and onshoring again. The consumer, it varies by income level. We've obviously seen basic wages increase a lot, particularly at the lower level. But at the same time, we've seen the prices of their staple goods increase more, compounded through time than their wages have, even though in many instances wages have doubled. So, it varies.
Well, and we kicked off here, Bill, getting into you that 1 year, essentially, a little bit more than 1 year since Silicon Valley Bank and the collapse of it. Do you feel like we're out of that environment? And I think one thing we have learned is, right, that not every bank, not every regional is the same and in terms of their exposure. But we're still kind of a little concerned about commercial real estate, not sure that we've gotten through that. So when it comes to concerns within some of the banking sector, do you think that we could see more trouble still, depending on their exposures?
At the margin, probably in smaller banks, most of which you will never have heard of. I think, first of all, as you know, I don't particularly like the term regional. It's not very descriptive of anything anymore, particularly in a digital age. So
I'm not going to call you a super regional, which people call you sometimes.
No, I don't know we're a national bank.
I know you are.
That campaign in a second, but practically, and you see the same numbers I do, is banks get smaller, they tend to have a higher concentration of real estate. Their concentration of real estate tends to be more fixed rate, medium term in length, and B and C properties, so permanent financing on older B and C properties, which is kind of the area that's going to get hit the most in a higher rate environment with, increased office vacancies. But it's not a systemic issue, certainly for the banking industry, not for any of the names you will otherwise know. And we'll make our way through it.
Well, let's talk more broadly just about real estate, and talk to us a little bit about your own exposure to real estate and commercial real estate. How can you characterize that for us?
Look, it's a small percentage of our total loans, not a big percentage of our capital. We have, plus or minus $8.5 billion, I guess, in total, what you would define as office, and that is where all the spotlight is. Starting to shine on multifamily, but we're not seeing stress in multifamily at the moment, notwithstanding, news that you might see out of New York and affordable and other places. Generic multifamily is doing just fine. But inside of office, say we have that $8.5 billion, there's about $4.5 billion to $5 billion that is multi-tenant, and that's where the problem is. And we expect problems there, and we're reserved to quite a high level against it. And thus far as we've cycled through, these projects that go non-performing, we've actually been conservative in what we've been reserving. So we feel okay about it. We're heavily reserved today. It's going to, most of our stuff comes due over the next year or so. It's kind of project-based. They come online. So we're gonna know the answer to this pretty quickly, I suspect.
Interesting. Hey, listen, we also said that boring is something that you guys are tapping into. We've got a great chart that we can share with those who are watching right now that our producer Elizabeth is going to share out with everybody. But it talks about bank management, not just your own, but others using boring on calls this year, quarterly update calls and earnings calls. It is up a lot. Boring, not a bad thing. And you guys have an advertising campaign that you are stressing that.
No, we do. I mean, I'll make a couple of points. I think if you look back in history, I've talked about our bank and banking in general is kind of 3 yards in a cloud of dust, and you grow, with GDP, and if you're good at it, you can outpace that. But we are, by our very nature as an industry, when you see outliers to that, there tends to be something going on underneath that. And when we think about, we use the word boring. I don't necessarily like to think of myself as a boring person, but
I didn't mean
banking
that.
ought to be. No, I get it, but boring. Banking shouldn't be drama for our clients. It ought to be predictable, consistent. Stuff works. They know their money's safe. They don't have to read about us in the headlines.
Right.
And that's who we are. That's how we define ourselves. We
Right.
to the core of this company,
Bill.
to the very best of our ability, we try to do right by all of our constituents every day. And when we screw it up, we fix it.
Bill, we're going to leave it on that note, but hope we can get you back here real soon. Bill Demchak, he's CEO at PNC Bank, joining us from Pittsburgh.